Welcome to The Mortgage Voice with Jeff Barton, your voice in the mortgage industry. Each week on this program, Jeff and his guests share their expertise, personal anecdotes, and the latest industry news to keep you in the loop. Now, to provide you with insight and help you navigate the consistently changing world of real estate lending, here is your host for The Mortgage Voice, Jeff Barton.
Welcome back, everybody. I'm Jeff Barton, your voice in the mortgage industry, and thank you very much for listening. And for those that can view at KCAA and KMET, their particular radio stations do carry a video feed. We're on YouTube as well. We carry the show there. The radio stations up at Tahoe and in Las Vegas. I want to say hi to all our affiliates. You know, if you want to see us, hear us, you can go to Apple, iTunes, Google Music Play, iHeartRadio. We are on a number of different podcast networks and stations. So if you do go to any of these, please sign up, be a member. We love people to give us feedback. So if you do give us feedback, that'll only help other people find the show. Our YouTube channel is Jeff Barton, the Mortgage Voice, and certainly you can see us there. We do a Mortgage Minute every day on LinkedIn as well as Facebook. I've been trying to tweet them out, but my tweeter abilities are not that great. There's something about Twitter itself which doesn't lend itself to longer videos. I think they limit it to like 40 seconds, and I can't stop talking. So most of these 1 minute, they called the Mortgage Minute, are about 3 minutes long. But anyway, we try to inform, keep you up to date as to what's happening during this particular crisis. I like the format. I like this particular format, informing and helping people decide what they're going to do with their mortgages if, in fact, they can get a mortgage. And that's one of the topics today. We have a bunch of great guests that'll be on the show, and we're going to talk to a couple of lenders as well as a manager from Malibu Funding, Charles Giscombe, out in Las Vegas, Nevada, to tell us what's happening out there. I know that many people who are listening to the show are wondering when and if we're going to get back to some normalcy. I don't know what that means in terms of what you're thinking, but the economic news and what comes out of the slowdown and people not working is devastating to the mortgage industry. It's devastating to many industries. One of the things that we need in terms of trying to get a loan to somebody is proof that they have a job. Now, we've harped on it. We've talked about it. There is no substitution. There is no magic wand. If you are in a situation where you have a loan right now and you are about to fund that loan, they're going to check to see whether you have your job currently and the prospects of keeping it. Some of the documentation that I've suggested that you get prior to submitting a loan is a letter from your employer or your accountant or both, stating exactly what your income is and your expected income to be going forward, as well as the prospects of keeping your job. Keeping the job and maintaining your particular income status is the most important thing in the ability to repay. Now, we have seen some relief in terms of those who have a mortgage in terms of forbearance. Now, what we don't know yet, and what most of us are wondering, because this is being made up as we're going along, is what happens when the time period for forbearance ends. Now, we were told 90 days. That's 3 months. Let's say it gets extended to 6 months, which I think is probable, meaning that you'll have 6 months of not paying that mortgage. Well, I want to ask a couple of our guests today, when that particular date comes due, do you owe that money immediately? Does that mortgage extension, the payments you didn't make, get tacked on to the end of the mortgage? And how does that really work when you already signed a contract with these people? The stipulations in the contract are very specific about missed payments. If the federal government has passed through the CARES Act this ability not to have you hurt financially, meaning that, yes, you can pay later, does that mean later is at the end of the forbearance period of 6 months? The end of the loan? Is it someplace in the middle? Do you average out? Do you have to refi the whole thing? We're not sure. And nobody has yet to really face the music on that because we are not yet at the end of the forbearance period. And as most things happen, they don't happen unless there's a tremendous push, need, stress, until someone's screaming. Now, during this crisis financially, there has been little screaming, really, because what we've been experiencing as government bailouts, i.e. the individuals, unlike in 2008, are getting checks. Now, they're not great checks, and they're not like they are in other countries, but you are getting a check, and I believe it's possible that there may be another check coming. Also, those, as I said, who have bills to pay and forbearance, you're having a hold on the bills that you have to pay, which is, again, another thing that didn't happen in 2008. Trying to keep all the balls in the air is exactly what this entire exercise is. Now, we are going under a lot of assumptions here. The main assumption is this: when people finally get back to work, the switch will go on and we will be able to get back to where we were prior to the coronavirus pandemic very quickly. I am not sure that's going to happen. The people I talk to and the articles I read, and maybe you do too, and I suggest doing that, because being informed about what's going on and what will go on is extremely important. Now, I wrote down here a couple of notes that I wanted to talk to you just about that, because I think the psychology and how we attack these things, these solutions to unknown timelines or deadlines, the solutions are, they're not forthcoming from administration or from the local governments. Quick story: I live in a beach town. Here, we have a lot of different peoples coming to town to work here. During the early stages, when there was a very strict, it's not as strict now, okay? I mean, it is, but it isn't. So I'm not really, again, looking for guidance. But in this particular case, workers would flood into town. They'd come off the public transportation. They were the only ones using the public transportation, or they'd walk, stand in the corner wanting to get work, going to construction sites, full-on construction going all over the place, because we had a huge fire here about 18 months ago. It wiped out half the town, and now they're rebuilding. So these essential, quote-unquote, essential workers flooding into the town. Now, the rest of the town, lockdown, not essential, stay at home. So it's confusing, because on the one hand, you see people being told that they're essential, yet in other parts of town, they're not essential. So what is the leadership, and where does that leadership bring us? In the national scale, there's no leadership in terms of what we're doing financially, other than here's some money, pay your bills, let's push the problem down the road. So I said, look, if we are looking back at what we've done so far, can we see where we're going to go in the future? That's the question that I'm posing, and I will pose to my guests later in the show. If we see, okay, so we have financial markets which are creeping back. Some days are better than others, but they're way off their lows. That's a good thing, right? For a lot of people who have their futures wrapped up in the stock market. Housing prices. If we look at housing prices the way they were going to where we see them heading now, do we have as many buyers? No, we don't have as many buyers, because if you're taking 3.5 to 4 million people in forbearance, which is putting pressure and stress on the Fannie Mae, Freddie Mac, Ginnie Maes of the world, those are the people that put together mortgage-backed securities and sell them to offset, the money that they need in order to continue to lend, continue to buy loans. That's what they do. They sell these bonds on the market. So if we're looking back at the way it was and try to view and see in the future of where we're going, we're probably going to see a decline in either the overall value of your home, or we're going to see a slowing, extreme slowing of the value and the price that you think you can get if you sell your house. So you're a person, you're trying to downsize, you want to sell your house, it's 2020, it's about to be summer, and you're not sure what's going to happen because the markets aren't telling you what's going to happen. And what happened in 2008 was we had about a 6 or 7 year problem in the housing market just because We didn't have the leadership that we have this time, maybe. Anyway, there's a lot to sort through here. I'm Jeff Barton, your voice in the mortgage industry. We'll be right back.
You're listening to The Mortgage Voice with Jeff Barton. We'll be right back with more in just a moment. For more information on today's topic, email Jeff Barton at info@malibufunding.net. Now, back to The Mortgage Voice with your host, Jeff Barton.
Welcome back, everybody. I'm Jeff Barton, your voice in the mortgage industry. If you would like to hear us through the podcast, Daryl has read off a number of these podcasting sites. Daryl, if you could just jump in and read them off again, I appreciate it. I've lost my notes here.
Oh, absolutely. It's Apple Podcast, Google Music Play, Spotify, Spreaker, Stitcher, iHeartMedia, Radio.com, and YouTube.
Thank you very much. And again, if you want to see us on YouTube or you want to see us on a couple of the radio stations that broadcast the video, the YouTube channel is Jeff Barton, the Mortgage Voice. And we've been on that channel for 5 or 6 years by now. We have hundreds of shows, but certainly during this time period, the information that we provide is weekly and up to date in terms of the solutions that we can provide you for your mortgage issues. A lot of people have them. People that want to purchase have them. A lot of large segments of the market are not around anymore. But what I did is I tried to find people who offer solutions, people who can continue to help in areas which are not necessarily defined as, run-of-the-mill or cookie cutter. A great friend of the show, has been on since really when we started the show a long time ago, is Eric Morganson from Angel Oak. Eric, how are you today?
I am well, Jeff. Thank you for asking. I am well.
Excellent. Okay. So you hear a little bit of the introduction, and you know what's going on in the mortgage space about as well as anybody that is out there. Your company was a big-time player in the non-QM world. What is happening over at Angel Oak now? How are you providing help to people who need a mortgage?
Well, that's a great question. In this non-qualified mortgage space versus the government and taxpayer backstop agency, FHA and VA loans, this is all 100% private capital, so there is no deferment of payments or any of that kind of stuff, unlike the agency stuff. Now, in this non-qualified space, the securitization market, where the loans literally get sold out on the open marketplace, completely shut down. Nobody is wanting to buy a loan for a guy that owns a restaurant and wants to buy a $2 million home and do it via bank statement. So the market completely stopped and went on pause for a month and 2 weeks. Now the industry is back up as we're over the corona curve, and now we start seeing signs of the economy really kind of popping its head up. So we now are offering business bank statement loans.
Okay, that's an excellent solution. I talked about it a little bit in my earlier segment. Explain some of the parameters and how does one qualify for this now versus the way it was 6-8 weeks ago?
Great question. So right now, the first business bank statement loan post the coronavirus is what we're calling it. The non-qualified 2.0 version is now requiring a 700 FICO score or greater. Before, it was a 600 FICO score or greater. The maximum loan to value is 70% loan to value. Okay. Before, it was 90% loan to value. Currently, we only offer business bank statements instead of tax returns, whereas before, we allowed either personal bank statements or business bank statements in order to document your income and your ability to repay your mortgage loan.
Okay, what kind of business bank statements? Obviously, there's a lot of small businesses that haven't been in business for 6-8 weeks. So looking for a particular business, a particular segment of businesses, or what are you seeing come across your desk as an example?
Well, that's another great question. So we're seeing high tech is still alive and kicking and hasn't skipped a beat. Construction, development, as you can drive by any construction site, they're fully working. Where we tread lightly is somebody that's a restaurant owner, and we're looking at his recent bank statements and seeing a big drop-off. But a lot of folks are still making a lot of money in restaurants with to-go orders. So we're doing those on a case-by-case basis. People that were in the automotive industry have seen a big drop-off, automotive mechanics and stuff like that. So we don't want to see severe declining income. What we want to see is an industry that shows some sort of stability.
Okay, and for somebody who has, and this was a loan that was being done all day, and I'm asking you, I don't know if you have solutions or what your thoughts are about a particular loan like this, but equity-based loan where somebody has, a tremendous amount of equity already in the property and they just want a lower rate and term. Do you have anything for them like that? Somebody that probably is 700 plus FICO score, maybe has 40-50% equity in their house, but wants to lower their particular payments.
Certainly, that is where the agencies would come in. Now, we do offer a full doc jumbo program if that either owner-occupied or investment property exceeded the conforming loan level. We will absolutely, but that's all full doc at this point.
Okay, excellent. Do you have other solutions that I haven't covered, or maybe you'd like to talk about?
Well, here's what we believe will happen. Nobody has a crystal ball, not even Warren Buffett, but here's what it all indicates. Looks like we're going to come out of this fairly quickly. So the guidelines today are going to loosen up another 30 days from now. 30 days from then, you'll see the guidelines loosening up, and we believe within a year we're going to get right back to the way the non-QM guidelines were before the coronavirus hit. So there is light at the end of the tunnel. The reason why you're not seeing a huge real estate dip like we did 10 years ago is simply because we don't have enough inventory here in the state of California in a lot of places. So you're not seeing property values suppressed where a lot of people thought. So that makes the people that are buying these loans very bullish because they're very scared to buy a loan like this if property values are on the decline. You see their loan-to-value position, whereas today they might be at 80% loan-to-value. With the market decline, maybe next year they're now at a 95% loan-to-value. The more likely somebody is over, meaning that they owe more on their property than their property is worth, the more likely they are to stop making their mortgage payment, as we experienced 10 years ago.
Now, your perspective is welcome, and I like the fact that you can compare one disaster, which was really, if it started in 2008, 12 years ago. So we jumped forward 12 years. This time, the government has gone in to help individuals. They've stayed the mortgage payments in forbearance. Do you think this strategy, obviously, so far it looks okay, but is it particular to this particular type of problem, or is this now the way that we're going to handle deep recessions in the future?
Well, that's an interesting question, Jeff. I'm not sure about the future, but understand if you're in forbearance and you've asked your mortgage company that, hey, listen, I don't want to make the payments right now, I'll catch up later, they're not hitting your credit score like before. So people's credit is still intact. So so the power of them being able to borrow down the road is still intact, unlike before. So I believe we're going to come out of this, and it's going to be, we're very bullish on this product offering. Again, right now the guidelines are strict. Watch what happens month by month by month. The beauty is that there's no prepayment penalty on any of these type of loans. Therefore, gosh, you can, when the rates still improve, let's say 6 months, even if it's a year down the road, you always have that ability to refinance it.
Listen, you've got great solutions. Can you shout out your phone number in case somebody wants to talk to you directly?
Certainly. My phone number is 949-554-5000. That's 949-554-5000.
Eric, thanks very much for coming on. Really, really good, concise information, especially about looking forward, being bullish. I'm in the same vein you are. I wanted to, let you talk about it, but I also think the light switch analogy is going to happen now, maybe a year, but that's still pretty quick compared to 10 years on the previous one.
Indeed, Jeff. Thank you very much.
Thank you very much. That's Eric Morganson from Angel Oak, and I'm Jeff Barton, your voice in the mortgage industry. We'll be right back.
You're listening to The Mortgage Voice with Jeff Barton. We'll be right back with more in just a moment. For questions or comments, send emails to info@malibufunding.net. Now, back to The Mortgage Voice with your host, Jeff Barton.
Welcome back, everybody. I'm Jeff Barton, your voice in the mortgage industry. If you'd like to see the show or hear the show, you can do that. iTunes, iHeartRadio, what are some of the other ones, Daryl?
Well, we got Spreaker and Spotify and Stitcher and iHeartMedia, Radio.com, YouTube, Google Music Play, and Apple Podcast.
Okay, excellent. So any of these places where you can hear the show, it's great. If you go there, you sign in, you sign up, you ask for us to notify you when the shows come up. But if you get a chance, do a little interaction. Tell us how you like the show, whether you don't like the show. Why? Because everybody that we get involved helps other people find us. These type of shows are not really that plentiful, even on this wild, vast universe in the podcast world. There's about 5 or 6 of them on a number of these stations. We are also on a number of radio stations in Southern California, as well as in Las Vegas, Nevada, and Central California. And our YouTube channel is Jeff Barton, the Mortgage Voice. And if you want to go there and see this as well, we probably have 300-400 shows there right now. We've been trying to keep up our information, providing you with solutions by doing it also on LinkedIn, called the Mortgage Minute, as well as on Facebook, Mortgage Minute. We're also on Instagram and Twitter. My Twitter chops are not great, but anyway, what we are going to do now is bring on a terrific person, been on the show several times, probably more than several times, to talk about what's going on over at Homebridge. And of course, I'm talking about Kim Soash, the account executive over there at Homebridge. Kim, how are you?
I'm doing great, Jeff. Hope you are doing the same.
Yeah, I'm doing well. Thank you very much. And one of the reasons I had you on today was to be able to see if you could tell us, Homebridge, what kind of loans you're doing now, how you're helping in this situation, not only to stay in business, because without people in business, we're not helping anybody, but also, are you seeing a light at the end of the tunnel? Where do you see product not only today, but maybe in a couple of weeks, couple of months? Give us your thoughts on any of that.
Well, it's been an interesting ride. The past couple of weeks have been interesting. It was March was certainly a roller coaster, and parts of April, but it seems to have leveled out. The past few weeks, rates haven't been doing the drastic jump and dive and jump and dive that they were before. They seem to be holding kind of consistent. Seems like that might be what we can expect for a little while. The Treasury is borrowing a lot of money, and so they're purchasing a lot of mortgage-backed securities, and so that down the road could maybe have an impact on rates. I think time will just tell. Right now, it's kind of a holding pattern that's been consistent and comfortable. Rates are, low and haven't been moving around too much, and so that's been good for borrowers, good for lenders too.
Hey, let me ask you a question. Okay. The products you guys are seeing come in the door for Homebridge, and what you might see in addition to the products you're offering now in the near future.
Well, I think that when we talked last time, the last few times we've talked, I've had some ability to help people that were self-employed or didn't have real strong tax income. And so some of those products are what are temporarily suspended right now. I won't say that they're gone for good, but I think just with the volatility of the market right now, lenders are a little bit leery of some of these more high-risk products that were qualifying borrowers just on tax returns or based on rental income only. And I know we had a really nice radio show with you last time we chatted talking about qualifying on rental income. So those things are gone for now. I really fully suspect that they'll come back. They may come back with a little bit tighter qualifying criteria, maybe, higher or lower loan to value. But I expect that they'll come back. I think it's just we're in a climate in our mortgage world that we've never been in before, and so I think there's just a lot of fear, and lenders are wanting to pull back from some of those more creative things. So right now we're kind of just doing your basic, rate and term refis, cash out refis, conventional loan sizes, and the government loans, the FHA and the VA loans are all still available too. Some of the lenders you might be seeing are requiring a little bit higher credit requirements, though, for government borrowing. Just again, because they're trying to
good point.
Get a
I
more
wanted to jump
borrower.
in there and ask you about credit qualifying. Where are we with credit scores on which programs?
Well, right now, Fannie and Freddie, we don't have any change in guideline on that. A lot of lenders have increased the credit requirement to 680. Right. I think I heard that one of the big banks, changed to 700, and are changing the loan to value limits are being restricted. We at Homebridge so far are still just following whatever the Fannie Mae automated underwriting kicks out. So 620 is the lowest score I've ever seen. I don't think that anyone will get qualified with something lower than 620. But we're taking whatever the automated underwriting system gives as a answer. So if we get approved eligible finding with 620 credit score, then we don't have an overlay for it right now. And we still are taking the loan limit up to the Fannie loan limit. So just depending on what you're doing, borrowers can qualify, 95% LTV on a purchase or a rate and term refinance.
Well, the fact that you're not putting overlays means that you're obviously a better competition for somebody who obviously has a FICO score, let's say 640, and they can qualify with DU. Like you said, a lot of lenders will not do it below 680, even 660, 700. But if whatever they qualify for, you guys will fund, that's a very big competitive advantage and really may make the difference between someone being able to buy a house and not being able to buy a house.
Well, and another thing, too, I don't know if you remember this, Jeff, but a few years ago, 2008, 2007, 2008, when we had the meltdown of the financial market, there was a product that was available from Fannie that was called DU Refi Plus, and it was really for borrowers that were underwater. And it could be the case that could come back. I hope it doesn't, but this is a real interesting market we're in right now. And we do still offer the product. It's not called DU Refi Plus anymore. It's called the Fannie Mae High LTV Refi. But it will allow borrowers to have, high LTVs. And the credit score, again, is, whatever AUS approves. But the CLTV is unlimited. So if they, they could potentially refi someone that has, over 100% CLTV up to 97% LTV. So
it's interesting. So you're talking values now.
Of these types of products, and we offer them. We just haven't had to use them in a real long time.
Right. As I was just trying to say, sorry, I didn't mean to interrupt. It's a little bit of a technical issue here, so a little bit of a delay at times. But the appraisal situation on properties that we may or may not see lower in value because however long this goes on, how are you all handling the fact of appraisals? And I know some of them are being waived because, you can't get into the house. But what do you see long-term or even short-term?
We're definitely honoring appraisal waivers when the AUS, when DU gives an appraisal waiver. We're honoring those. And we're also allowing borrowers to have the ability to do desktop appraisal or to do drive-by appraisal where it's appropriate. So cash-out refis, sometimes they won't allow that, but if it's a rate and term, sometimes even with purchase, it's possible to have a drive-by or just a desktop so that people aren't having to, we're not having to invade people's quarantining,
homes.
Protocol.
Exactly. No, I totally understand that. Hey, Kim, we have about a minute left. Do you mind shouting out to the audience a way to get in touch with you if they wanted to talk to somebody over at Homebridge, especially with these advantages you have?
Oh, certainly. My name's Kim Soash. My number is 970-4016. I'm an account executive over here at Homebridge Wholesale, and would look forward to your call or questions. And I thank you always for having me on your show, Jeff. I really appreciate it.
Kim, thank you very much. We always like having you on. You're bright and also energetic, and presenting programs that, with the FICO score enhancement that you guys can offer rather than the overlay, that's a big deal. And I really appreciate you telling everybody.
Well, thank you.
Yeah, no problem. We'll see you next time, Kim. Thanks very much. I'm Jeff Barton, your voice in the mortgage industry, and we'll be right back.
You're listening to The Mortgage Voice with Jeff Barton. We'll be right back with more in just a moment. For questions or comments, send emails to info@malibufunding.net. Now, back to The Mortgage Voice with your host, Jeff Barton.
Welcome back, everybody. I'm Jeff Barton, your voice in the mortgage industry. Thanks very much for tuning in. You can see this show, hear this show on a number of different podcasts. It's Apple Podcast, Google Music Play, Spreaker. I know Daryl will read the rest of the list. We have a number of different places that you can hear this particular show. You got that list on you, Daryl? Please.
I sure do. It's Spreaker, Stitcher, Spotify, iHeartMedia, Radio.com, right, and YouTube.
Excellent. And our YouTube channel is Jeff Barton, the Mortgage Voice. You can see us on that particular show. We're on KCAA, KMET in the Inland Empire, K-Tahoe up in Central California, as well as up in Las Vegas, Nevada. We're at KSHP, KSHP, and that's a new affiliate that we have, 1400 AM, and we are on the weekends there. We also are doing 1-minute mortgage segments for LinkedIn and for Facebook. For those people who like to digest things on a daily basis, this is a weekly show that we're doing today, The Mortgage Voice. And The Mortgage Minute is exactly that, a minute on Facebook, Twitter, and LinkedIn, and a number of other places. We are looking for solutions. We're looking for a timeline, and we're looking for issues that may come up when you're trying to refinance or buy a house. All of these things are updated, individual, and personalized to whoever is asking the question. But there are a number of general, things that we can talk about when it comes to the mortgage market in general. For both specific and general information, I brought back to the show the Malibu Funding Qualified Employee Manager of the Nevada office in Las Vegas is Charles Giscombe. Charles, how are you today?
I'm doing good, Jeff. Thanks for having me.
Thank you very much for coming on the show once again. Okay, I know you're traveling. You have a number of different places where you do loans, and you talk to buyers and borrowers, refinancers all over the country. What's the feeling out there in terms of, is it frustration that they can't get a loan? Is it, happy that they can, or that the values aren't going down? Where is the market currently?
Great question. I've been talking to many different borrowers. Obviously, Jeff, we do traditional mortgages. For those who don't know, traditional, we do, government loans, FHA, VA, USDA. We also do Fannie Mae, Freddie Mac loans. And then we do investment and commercial loans, Jeff. And my business, we run the gamut. We do it all. What's been the most frustrating part is, obviously, from an investor standpoint, on the other niche programs, like the non-QM programs, a lot of those banks were the first to suspend or bow out gracefully until they find out what the market stabilization. The reason why is, obviously, they're doing bank statement loans, so they're not having all the full documentation that a normal traditional loan or a government loan would have. So for that reason, first of all, they lowered their LTVs, and then altogether, most of them backed out. Now, there are still some non-QM lenders that are lending, and Malibu Funding has great relationships with those banks that are still working doing the non-QM business. So we're still able to get deals done. The LTVs might be a little bit lower, but we are still able and capable to get those loans in and get those loans done. So please don't, if you're a little frustrated because you're dealing with some other people, come to Malibu Funding. We have some solutions. We have great relationships, Jeff, and I'm very appreciative of that, because Jeff has been able to maintain those relationships, and we're able to garner and grow new relationships as we go along. As far as traditional loans concerned, traditional loans are still happening. Everyone's still lending. The lenders are still lending. Right. The majors are lending. Even the smaller banks, they're still lending. Obviously, there might be some more guidelines or overlays meaning some more things or more documentation you have to provide, but they're still lending, and they're still lending at the same LTV and clips that they were before. So if you need a loan, please come to us. We have those relationships as well. Malibu Funding, obviously, is a correspondent lender and a broker as well, so we can do loans in-house as well as broker them out. So we have a plethora of relationships and resources and products that we can provide to individuals that want to purchase, refinance, any of those things you want to do, we still can do. And I'm grateful again to be able to provide those services in this climate, Jeff.
The credit scores. Now, I've heard across the board, even a bank like Chase has raised their credit score to 700 for any loan. Some of the lenders have stayed at 620, 640, 680. Where are we in that whole morass? Because I know a lot of people who are having difficulty paying bills right now. I mean, you're not getting forbearance on your bills. So how is all of this affecting, the ability to be able to borrow or get a loan?
Well, this is the thing. That's what we talked about before previous, and that was overlays. Okay, so now what's happening is the banks have to position themselves not to be upside down or to be able to lend and be comfortable for themselves as well. They're in business to make money, obviously not to lose it or give it away. So that's what they're doing. They're hedging their bets. So where a FICO score or a credit score could have been a little bit lower when they were qualifying you, now they're raising that. Obviously, they're looking to get a more experienced, or more seasoned, or more financially stable borrower into their stable to provide loans for. And they know those individuals may have the documentation, may still be employed, may be self-employed, or obviously those individuals that provide stability. But the loans are still happening for other individuals, FHA loans. Some companies raise the minimum FICO score requirement up. Right. I just got some emails the other day, Jeff, that had lowered them back down to 600, so they're still allowing people to still transact. Obviously, as a whole, across the board, the FICO scores have been raised up so that people can qualify for certain loans, but there's still lenders out there that are allowing 580, 600 FICO scores to get done. Okay. And like I said before, fortunately enough, Jeff, we have the relationships with those banks that will still allow us to get people in and give them some purchasing power.
Now, when you're buying a house, right? Anybody out there buying a house right now, and I think the inventory is still low, so prices on the market are remaining relatively stable. We might see a bit of a dip, but where do you see in terms of you're writing a pre-approval or pre-qualification letter? How can any lender guarantee that pre-approval letter today is going to be the same, that the lenders are going to accept in 30 days when you have to fund that loan, or 45 days?
Well, that is another reason why, going back to what the current state is, this pandemic, this COVID-19, that has hit the world by storm, and obviously it's lending us here in the United States. I'll tell you this. The lenders have lowered their LTVs, and they're not giving as much so that they can protect themselves so that values do drop. What I have been seeing is that for the appraisals that have been getting done, still been coming back with values, Jeff. They've still been coming in. So they haven't been lowering that much. That's a good thing. Obviously, with the inventory being low, a lot of people are looking for this market to become more of a buyer's market, which it is, Jeff, but not as much as they thought it would be because of the market currently where we are. So the values are still coming in. In some deals, Jeff, you have to get normal deals. You have to get your appraisal done. But in some situations, with some of the banks and with DU and Fannie, you can get appraisal waivers. So a lot of these people are getting their appraisals waived so they don't have to get an appraisal, and they're trusting that these values are going to come in. Now, who's to say, Jeff? We really can't say that within the next 30, 60, 90 days, we can't predict what's going to happen and if the values are going to decrease. But as it stands right now today, as we're doing loans, the values are still solid. So people should be comfortable knowing that they move forward, that even if they're refinancing, that they can be comfortable knowing that their current value right now, it stands, and the banks and the lenders are honoring that.
Give me a crystal ball, look at it. We have about a minute left. Where do you think we are in 2 months?
In 2 months, based on where we are, I think that there may be some drop in value, Jeff, but I'm really not sure, depending on what the government does to shore things up. I will tell you this, for right now, where we are right now, we need to still move money. We need to still transact. We need to take advantage of where the interest rates are. People still should be out there purchasing. The only way we're going to get back into the flow of things is that we continue to purchase and have faith that as a country we're going to come together and we're going to figure this thing out. It's not going to last forever. So you know what? I know that you can move towards it conservatively, but you still need to be out there transacting. As far as Malibu is concerned, Malibu Funding, Jeff and myself and the rest of the team and staff will be here to make sure that we can provide all the services that you need and answer any questions that you do have in the event that you are looking at refinancing or purchasing, or if you just have some questions in regards to where things are going to go as far as paying your bills, paying your mortgages, and what kind of help you can get from the different lenders that we are dealing with.
Hey, Chuck, shout out your phone number quick. We're right at the end of the clock here.
Not a problem. Phone number is 702, that Las Vegas number, 702-328-5191. Again, 702-328-5191. Call me, reach out to me, and my email address, charles@malibufunding.biz. That's charles@malibufunding.boy, Isaac, Zebra.
Chuck, thank you very much for coming on the show once again. Great solutions for everybody. I appreciate it.
Jeff, thanks for having me. I'm always here to help. Thank you so much.
Thank you very much. And I'm Jeff Barton, your voice in the mortgage industry. We'll be right back.
You're listening to The Mortgage Voice with Jeff Barton. We'll be right back with more in just a moment. For more information on today's topic, email Jeff Barton at info@malibufunding.net. Now, back to The Mortgage Voice with your host, Jeff Barton.
Welcome back, everybody. I'm Jeff Barton, your voice in the mortgage industry. If you want to get a hold of us, you can. We have a website, www.malibufunding.net, and you can go there. We have any number of different types of loan officers and great people that work for us. We have a number of calls that come in, especially recently in the last 2 weeks, about different scenarios, difficult scenarios that we or you have to work through in order to find it. We had a issue come up just yesterday. And by the way, you can see this show on a couple of the radio stations that broadcast KCAA and KMET. You can see it on YouTube, Jeff Barton, the Mortgage Voice. You can also hear the show as well on those radio stations on YouTube, especially, as well as K Tahoe up in Tahoe, California, and also in Las Vegas, Nevada. We are on 4 different stations, looking to add some more during this time. Part of what we do is podcast as well, and you can see that on Apple. What is it? Apple? Is it iTunes?
I actually wrote down the big 8 for you this week.
Oh, you did? Excellent. I saw that in the camera.
Are you ready? Yeah. Apple Podcast, Google Music Play, Spotify, Spreaker, Stitcher, iHeartRadio, radio.com, and YouTube.
Thank you very much. And we like the podcast. A lot of people listen to the show, not during the broadcast, but certainly when they can. And it always is helpful. You know, there's not a ton of these kind of shows out there. Last I looked, there was about 5 or 6 on any of these given podcasts. So the information that we give you is specific to the mortgages and the real estate in your world. And we try to keep it local. We try to get solutions onto the air. Anyway, as I said, we're on YouTube. We're on all these terrific podcasts. And if you get a chance, tune in to the radio shows, which are usually on the weekend, Saturday and Sunday on any of those fine stations. Getting back to what we were talking about during the show, and I want to thank the people who are on the show with us today, Kim, Eric, and Charles, bringing different perspectives on the lending world and the solutions with which we try to provide. We, meaning Malibu Funding. Malibu Funding sponsors the show. They hire me, and I come on and I talk each and every week, trying to bring solutions, not necessarily be a cheerleader for what I do, but currently it's a difficult environment for those who are looking for a specific type of loan. What do I mean by that? Okay, if you're a 750 FICO score and you got 20% down for a purchase, and you've got a job that is just smoking and isn't going anywhere. Let's say you're, in any of the municipalities, none of those people have been laid off. Any of the governmental jobs, none of those people have been laid off. Let's say that you're in finance or you're in medical or any number of terrific industries. And again, there's 140 plus million people working. So of the 20 million, 25 million people who aren't working, you can see that there's still a huge economy that is working. But for those people that aren't working, but still want to get a loan. I had a call yesterday, as I was saying earlier. A gentleman called me. He said, look, I sold my business 3 years ago. Hey, good for you. Yes, it is good for me. I have $3 million in the bank. I own 2 houses, one that I own outright, don't owe any money on it, and the other one my ex-wife owns. And we have $600,000 against that property on a $1.2 million property. So it's about 50% equity into the house. My particular income right now is limited because, as I said, I sold my business. I am on as a consultant to the business person that I sold to, but I make $3,000 or $4,000 a month, and I want to get a $600,000 loan for the house that I own that my ex-wife lives in. And the reason that I want to do that is because the interest-only loan, the 10-year interest-only loan, is come due in August, and that's what I want to do. Now, in normal times, this is not a problem. This is a equity-based loan, and there were a dozen different lenders that would do this type of loan, especially since he had so much money in the bank because he sold his business. His credit score is not an issue. It's in the mid 700s. But the non-QM space, that's qualified mortgage. And the first loan scenario that I mentioned is a qualified mortgage. That means that Fannie Mae, Freddie Mac, Ginnie Mae, they're going to buy this loan because it fits within the parameters that they have set out in order to do business in a qualified mortgage. And because of Dodd-Frank in 2008, the last time we had one of these pandemics, it's not a joke, but I mean, at the time, that was the worst thing that could ever happen. It was called the Great Recession. Many people thought it was a depression, which, I don't know economically what that even means, except that we had tons of people out of work. We had property values falling through the floor, and it took us, 7, 8, 9 years to get back to where we were with prices in houses and the ability by which we could lend money freely and consistently. Well, we're in that situation again. So this friend of mine who called me asked me, can we do this type of loan? And I explained very frankly, there are a couple, 3 lenders that will do it. We will investigate it and see where we are. He even went so far as to say, look, if I have to put more money into the deal, i.e. come to the table with money in order to get a loan, I will do that. Now, this is a guy who has 50% equity in it already. But the problem is that the appetite for the type of loan that this is not there, because the security for that particular loan is based on no income. It's based on equity, it's based on cash on hand, and it's based on FICO scores. Now, the non-QM market that existed 2 months ago doesn't exist anymore. And as I said, there's 2 or 3 lenders that'll do it. We're going to try to help the guy out. But this is the issue that many borrowers are facing. Many people in the market right now who want to buy have, businesses or have personal finance that can afford the home, but they don't have the job. Now, we used to be able to get around that because the job wasn't the important thing. The important thing were several other factors. Or you could use your business bank statements. Well, as we all know right now, that particular program is out the window because most of those business bank statements applied to people who had a business, a small business, and they took write-offs against that business in order to not pay the heaviest tax. They were either a sub-S or some other type of LLC, and they had write-offs that they could, like a car or some other kind of business write-offs that they would also use in a personal way. But those type of business bank statement loans, because the businesses aren't in business anymore, aren't available. Now, there are, as I said, a few lenders that will do certain types of loans in certain situations. So when you see a teaser, or I guess that's not a great term because it implies that somebody's lying to you. When you see an advertised loan program out there and you say, hey, I could do that, remember that the risk you have in terms of, as a borrower, as any risk would be for any borrower, is greatly scrutinized if you don't have the job that proves out its income and its stability over the next 30 years. in forbearance, the loans in forbearance, I want to quote you a couple of statistics. Last month in March, now forbearance, for everybody that doesn't know, it means you're putting a timeout on the mortgage payments. That means you do not have to pay now, but you have to pay later, and it doesn't affect your standing with that loan. You will not be foreclosed upon. You will not get a notice of default. You will not get any negativity against you, although it's a waiting to be seen about how that affects your credit. And I'd like somebody to tell me how it's affecting their credit if they're in forbearance right now. But we have about 3.5 million to 4 million people in forbearance right now. Of the total loans in the system, that's every loan on a piece of property, 1 to 4 residential. Last month it was 6.99% of the amount of loans in the system that were affected by forbearance. March. April, the figure just came out, 7.54%. Now you can see that's gone up a half a point or more, which is a lot of borrowers. But that particular number is slowing. So the growth is slowing in forbearance, which is a good thing. We may be at the end of that particular cycle. Anyway, a lot to digest this week. Thanks very much for coming. Thanks very much for listening to the show. I'm Jeff Barton, your voice in the mortgage industry, and we'll see you next time.
You're listening to The Mortgage Voice with Jeff Barton. For more on today's topic, visit www.malibufunding.net.